Good morning from downtown Chicago, traders. It's 8:02 a.m. Chicago time on Monday, the 9th of February 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Um, the key news driving us overnight has been the Greek issue. Equity markets open lower in Europe as more pressure from Greece comes to bear. UK is reportedly preparing for a Greek exit. Greece exit risks rise. Greece PM Tsipras, I don't know how you say that, Tsipras, hardens his election pledges to roll back austerity and reject any bailout program extension. So on the one hand, he was sending the Greek finance minister last week throughout Europe to promise, with the promise that they'll work something out. On the other hand, the new PM is saying he's going to stick to his hard line that he won the election with. German automakers weighed down by broker commentary overnight, and then the Chinese January trade balance hits a record high surplus, 60 billion versus 48.9 billion expected. And that's in dollars. As components deteriorate, exports year on year negative 3.3 versus plus 5.9% estimated. That's really a big difference. Imports negative 19.9% versus negative 3.2% expected. Risk for the yuan currency depreciation is rising. So there's a lot of pressure there. Looking ahead at today, we don't have much on deck. At 9, and we have this thing, labor market conditions. I've not seen this number before. That's at 9 o'clock Central. There's no estimate prior 6.1. At 10:30, we have the Treasury to sell combined 52 billion in 3 and 6 month notes. This happens every week. At 7:30 p.m. Central, China January CPI comes out expected at 1%, and PPI is expected at negative 3.7%. Looking ahead at the week, tomorrow we have U.S. wholesale inventories. The calendar does not look heavy at all this week. We have UK manufacturing overnight that's coming out at 3:30 Central a.m. We have U.S. chain store sales at 6:45, U.S. Redbook, and then NFIB small business optimism, and then at 9 Central we have wholesale inventories, wholesale trade, IBD tip economic optimism, and JOLTS job openings, and then we have a crop report at 11 Central. Whenever I hear that, it reminds me of Trading Places, the movie. And then after the market, we have API crude oil. As far as speakers tomorrow, we have ECB's Costa and Prate, Fed's Lacker as well. And then on Wednesday, even lighter calendar, we have really nothing overnight. And then we have crude oil inventories at 9:30 Central. Gasoline, distillate, refinery, all coming out together. Then we have at 1 o'clock we have the monthly budget statement, and then Fed's Fisher and ECB's Kerr, also during on Wednesday. Thursday, we're looking at the Australian unemployment rate, which comes out at 6:30 p.m. on Wednesday night for Thursday's session. And then industrial production in Europe, Bank of England quarterly inflation report. And then in the U.S., we're looking at retail sales at 7:30, initial jobless claims. And then other than that, EIA natural gas inventories, as well as business inventories at 9, gas inventories at 9:30. ECB's Prate speaking. And then Friday, we have GDP across parts of Europe, Germany, France, and then payrolls in France, CPI in Spain. It's not important. GDP in Europe, and then we have Michigan sentiment in the U.S. Preliminary comes out at 9, and then Philly Fed also at 9 on Friday. Again, ECB's Constancio and Fed's Fisher to speak on Friday. So pretty light week on the calendar, not seeing anything tremendous as far as earnings either. AIG on Thursday, Cisco Systems, PepsiCo, and some others on Wednesday, and then Tuesday, pretty light there. On Tuesday, Coca-Cola, CVS, and so on. So pretty tame calendar for the week, nothing tremendous. We're still likely to feel the after effects of Friday's non-farm payrolls release. If you were here Friday, you probably saw that the market shot up. Let me switch over to my charts. So when we look at Friday's action here, we see non-farm payrolls right here. The scene of the crime being about 55 even, 2055 even. We're looking for a break of 2060. Got that pushed to 65.50. So the boundaries for non-farm payrolls 65.50 down to about 55. Again, the scene of the crime at 55. Very balanced profile overnight. And then we open up on Friday. We expected responsive selling, and that's what we got. We sold off Friday down to 44.50. Nice little rally to the mid on Friday afternoon, and the market closed. But then we look at what we did yesterday. By the way, we did take out the scene of the crime here into the session. We sold off to the point where we took back the entire unemployment number. The number was stronger than expected, and today we're gapping down with Europe. And overall, it's just been sideways to a sell skew, with the profile showing a lot of heavy consensus in the 45 to 40 zone this morning, with multiple bottoms. We just hit a new low here at 38.75 and holding. So overall, it looks like this is another day of balanced pullback. On Friday, as I just narrated, we got what we expected: an open auction out of range, sideways. Market traded both ways, could not hold the value area of Thursday. Shot up to 68, and then from there it just sold off, and it couldn't hold. It could not get back above the mid, and was stuck inside of the prior day's range, and ended up selling off until the close. So overall, Friday was trading Monday's range. You could see here, Monday's low is 43, and Friday's low is 44.50. We're trading below it. So this is another, this is another balancing day, and the pullback continues. So when we look at what we've done on Friday, we've managed to push into that 60 finally, and then we sold off. So overall, it's not. There's not much to say here other than we're still in balance, and we're still fighting the same ranges. We've been in a nice uptrend. We've had one time framing up for several days now. It looks like we're likely to break that today, and pull back and start working on the areas beneath us. We have a naked point of control at 2040, and then we have some gaps here. You can see these dashed orange lines are gaps area that have not been tested. So we look like we're going to fill the gap zone that we left behind from last Wednesday, and we're likely to struggle to push higher today. So again, 2060 is the cap, is expected to be the cap today. And I would be very suspicious of rallies for today. Essentially, what we're doing is we're opening out of range. Expectation is for it to test higher early. Overnight inventory is short. I expect it to balance out. So the expectation is for it to test higher early, 2050, and to be confronted with sellers to rotate down and start working itself back into 40, and then potentially 30, 50, and then back to that 28 zone. From our big composite. As I said, there's really not much to talk about here. So what we've done here on Fridays, we've pushed into this upper high volume node right here. This upper high volume node, we've struggled with this big high volume node area down here for quite some time, and we keep falling back. So we've tried it once, twice, and then we broke through on Friday. And now we're having a pullback. The next high volume node, again, these prices are getting really stale. 34 down to the 23 area. This LVN to LVN covers this high volume node. And so if it starts to drop, I would be looking for a trip back to that last acceptance price. I don't expect it to drop that far today, but I don't expect very much action today either. I expect it to be fairly muted, which it normally is after Unemployment Friday. Okay, so again, once we open, looking for responsive higher, but looking for sellers to put a cap on it, and I expect buyers to struggle a little bit to push through into and through 2060 this morning. I'm looking for it to stay capped out today. So don't get too aggressive. I think that it'll be a fairly quiet day with short-term traders most likely taking control early. As far as Euro stocks, we had a gap down. If you recall, we've been talking about this 3370 area. Let's see, pull this back. 3370 area, which is shifting down, and we've gapped down, and it's starting to move out of balance here. We've been in a beautiful balancing range for quite some time. For about 2 weeks now, we've been balancing out, and today it's gapped. It opened right at the point of control, and it's moving down in the European session again. Automakers getting hit a little bit, and then we have a trend day the prior day, so it's likely to start retesting this. The target below for today is 3271. That's the extended target in the Euro stocks, but again, expecting a muted day, fairly quiet trading across the board. I'll leave you with that thought. Don't forget to set your goals for this week and measure your performance. If you're not measuring your performance, really you're just floating along and you're not deliberately practicing whatever it is you need to work on, either reducing errors or picking better trades, playing higher probability trades to improve your expectancy overall for the week. Good luck, and I'll catch you tomorrow. Take care.